Good morning, everybody. Man, y'all have been busy this morning. I like it. All sorts of busy people going on this morning, doing things and stuff and taking trades, and looks like a lot of you are making money. I like that. Good morning, Bob B. the Man. Good to see ya. I took one of my favorite pictures this morning. But there's nobody in here. I mean, there's 7 of you in here, and I appreciate each and every one of you. Not a lot of bodies in here. That's okay. I'm going to do my thing because that's what I do. Guys, this is one of my favorite pictures that I can ever take, and I've probably taken it, I don't know, 50 times over the last couple years. This is the crude oil market, guys. This is the crude oil market in 2022, and this is the crude oil market this morning. And you will notice some shocking similarities. Straight to resistance, pulls back to the mid-band and support. Large triggers don't follow. Goes up, creates a pivot stop out right at that key area. This is one of the best examples I could ever give to remind you that the market has a memory, guys, that patterns repeat themselves over and over. And our advantages don't come from hoping to win a trade, and our advantages don't come from needing to pay our mortgage or wanting a new Ferrari. Guys, our advantages just simply come from the indicators. It's the patterns, and that's what we learn in this room, is we learn patterns, things that repeat themselves each and every day. More importantly, we're going to study patterns that you can test, that you can prove win more than they lose, and you'll be able to focus on simply trading those patterns. But before we do that, one of the things that can disrupt patterns is news. High impact news specifically is what I look for each and every morning here on forexfactory.com/calendar. I just dropped the link in the room for you guys. I'm looking for these red boxes, and not because I worry about unemployment claims, not because I worry what they say or what's going on in the unemployment world, but rather I know that anytime I see a high impact news, it can disrupt my patterns. It can make the market spike or jump or bump. Today it didn't have a lot of effect. It didn't really go one way or the other, and that's okay. At 10 a.m. we have what's called a medium impact news, existing home sales. Again, my life doesn't revolve around home sales, but I know that a medium impact news can disrupt my patterns. So I choose to either avoid or protect when that happens. Everything that I'm going to talk about this morning does come from the Nexgen page. Everything that I talk about specifically from the trading guide. And in the trading guide, there's every rule that I talk about. Hey, good morning, Joel. Every rule that I talk about, you can find in the trading guide. The looks that I talk about, the advantages that I talk about, it's all available to you in the trading guide. There's really no secrets with Nexgen. But we do focus on one particular trade first, and it's what we call a high probability trade. And a high probability trade is a trade that when you follow the rules typically wins 70 to 80% of the time. It's a trade that because of that win percentage potential, it creates an enormous amount of confidence. There's an old saying that confidence comes through the memory of success. So for my new users, my goal, hey, good morning, Steve, is to help you create as much success for yourself as possible because it creates that confidence, and that confidence is what establishes trust. And when you trust the patterns that you're trading, that's when you don't hesitate. Good morning, Cab. Great to see you. So what we talk about first is a high probability trend trade. And I do it for a very specific reason, guys. A high probability trend trade, its sole function in your life as a brand new user is to teach you how to read your charts, how to read your indicators, how to recognize advantages, more specifically, how to recognize the patterns. And the high probability trend trade rules are nothing more than a description of a pattern that's been proven to win more than it loses. Good morning, Adriana. Done for the day. That's awesome. It's only 9 a.m. That's a good morning. I love your trades lately. I hope that you're getting the feedback on the video. I'm trying to make sure I'm very specific when I talk to you. Awesome. Very good. Guys, chart reading. Chart reading is 90% of your day. Chart reading is the core of what we do. Being able to look at a chart and say to yourself, okay, here comes the pattern that wins more than it loses. Here's the advantages that describe that pattern. And guys, you'll find that you'll sit still a lot as a day trader. You'll do a lot of nothing as a day trader. There's a lot of playing solitaire off on the side, video poker, Scrabble, whatever your thing is, reading a book, drawing a picture. 10% of your day is trading. 10% of your day is being active. 10% of your day is pulling the trigger because the rules are met. So your chart reading is going to let you know when it's time to pull the trigger. But once you get good at it, and guys, it doesn't take long to get good at it if you keep it focused, you'll understand where the market is likely to continue. We're going to use that initially as the entry for a trend trade. You're going to understand where the market is likely to go. This is going to help with targets. And then you'll understand where the market is likely to stop. And these are what we call termination conditions. And Faya, if you saw my feedback on your picture, I quoted you to make sure that you could. Those termination conditions can stop a forward trend. They can stop the market cold no matter how much momentum there is in the market. So guys, understanding these very basic concepts is going to help you focus on advantages, having an edge each and every time you pull the trigger. This classroom is practically the same thing every day in the first hour. The first hour, you're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. Which means that when the rules are met, it's okay to trade. Your rules are describing that pattern that's been proven to win more than it loses. You do have the ability to simulate, to practice, to get in there, to try trades. And guys, I'm going to tell you right now, you will break rules and you will lose pretend money. It's okay. Every trade that you take, every time you look at a chart, guys, it's an opportunity. And if you'll just post your trades in the room, and even more importantly, not just post your trades in the room, but tell me why. Explain to me what it is that you saw on your chart that made you want to take that trade. Let me know. AFLAB talking to you right now. Get used to writing on that chart. Talk about the advantages that you see. Tell me why you did what you did. And what happens is I get the opportunity to give you the absolute best feedback that I know how to give you. But if I don't know what you see, it's hard to make sure that you're seeing it correctly. We're going to simplify. I'm going to hand you a plan that has 2 trades on it. Both of these trades. So are you using Snagit or are you using Capture software, AFLAB? We'll get you squared away. Is it Snagit or is it Capture? And I'm trying to get my Capture software up here. We're going to go over a whole thing. We'll do that. You don't have to answer. Guys, I'm going to hand you a plan that says, here's your highest probability trend trade. Here's how you enter it. Here's how you manage it. I'm going to break down each of the rules individually. We're going to talk about them. We're going to go through them, how to identify them, how to study them. And your job is to learn those looks, learn those patterns so that they become easy. And they come easy through repetition, guys. Seeing the same thing over and over. Good morning, Ron. Seeing the same patterns, seeing the same advantages, looking at them, talking about them. Guys, that's what makes it easy. And that's the second piece to becoming a confident trader. First, you're going to post in my room. You're going to flood my room with as many pictures as you feel like you want to put in there. There's never been too many. And the second thing is use the spreadsheet that I give you. And I give this spreadsheet each and every day. I give the spreadsheet, let me drop it in the room here, because I update it a lot. Almost every day I steal stuff from you guys and make the spreadsheet even better. But there's 4 tabs on it. And guys, the first tab, this is your core, your foundation. This is learning to recognize those very basic advantages. Strong triggers, clear path, and your entry. That's the recipe for a trade. Weak triggers, termination conditions. That's when it's time to sit still. This sheet helps you recognize the difference so that you don't make that mistake. There's a lot of client trades here. You guys doing great things with the software. New users, go through and study these. And what I like when you guys do is be trade police on other people's trades. Focus on the advantages. Make sure they had them all, and you'll see that 90% of them do. There's how to enter, a little bit on management. There's a tab for you to build your plan with all your great pictures. And then there's a trade tracking sheet. And the trade tracking sheet is where every time you take a trade. So for example, AFLAB, post it in the room. And this is the second half where we go back and look at this. And we're going to get you to where you can write on it. But what AFLAB would do, once he can do it, is he's going to go, Mark, I want you to see this. I had strong triggers. There was nothing in the way. And my small chart had strong triggers and nothing in the way. I jumped in and rode that momentum to trouble. AFLAB, does that sound about right? So AFLAB is going to say, Mark, this is what I saw. This is where I saw it. This is what I did, and that's where I stopped doing it. What do you think? And I'm going to go, AFLAB, oh my gosh. Strong triggers, the advantage of momentum, insanely great advantage. Nothing in the way, beautiful. Taking a trade with momentum on both charts, absolutely nothing in the way, and choosing to exit at trouble, outstanding. And AFLAB's going to go, man, look at me, I'm kind of a rock star. And he's going to go to his trade journal, and he's going to drop that picture in there. And he's going to say, perfect momentum trade. And the feedback is going to be, this is how you do it. Nice. And tomorrow morning, AFLAB's going to wake up, and he's going to look at his spreadsheet, and he's going to say, all right, what worked for me? And he's going to realize that when he has momentum, when the path is clear, he will find a way to make money. And he did. So now he's focused on that exact look because he knows that look's a good look. And maybe he made a mistake on there. And he'll say, okay, this is the mistake that I need to avoid. And guys, if you do this every morning, if you fill up that spreadsheet, if you look at the feedback, it sets you up for the day. It does accelerate the learning. So AFLAB, great momentum trade there, by the way. I hope my annotation was correct on why you did what you did, because if that's your reason, if momentum and a clear path is why you did what you did, that is an outstanding reason to enter the market and find a way to get paid. And your recognition of key Fibonacci area is a great place to take profits. Outstanding. So guys, that's what we're going to do. We're going to learn the rules. And I'm going to tell you right now, the rules for the high probability trend trade are just taught. They're there to teach you to read your indicators, guys. Aaron, Bjoy, Faya, AFLAB, I'm not shackling you to this trade, but what I'm doing is I'm teaching you to recognize a couple advantages that will carry over into everything that you do. Practice, post those trades, talk about what you see. Get that feedback from me, guys. One of the biggest things when you're new is just figuring out what you're doing right and wrong as you find your way with the software, as you learn to read the indicators. That's my job. My job is to teach you to read them so you can make good decisions based on what you see. Keep it simple in the beginning. There's no reason to overthink things. There's no reason to add rules. Keep it as basic as possible, and what you'll find is you're capable of finding success. The high probability trend trade is 3 rules deep. That's it. There is strong triggers is rule number 1. When that rule is true, you have the advantage of momentum, a market that's difficult to stop. Rule number 2 is no termination conditions, making sure that you have room to your profit targets. That's what we're going to call a clear path. And these 2 rules, this is the foundation, guys. Once you understand these 2, and AFLAB showed it beautifully, once you have momentum and path, you're going to find a way to capitalize. So really focus on these 2. The entry that I teach in the room each and every day is what we call, it's for the high probability trend trade. So rule number 3 is going to define the point where the market is most likely to continue, where it's most likely to bounce and give you an entry. And once you understand these 3 concepts, they work their way into pretty much everything you do. Here's a good one. Knowing where to find your rules met, knowing where to look. And AFLAB, this was a good one because you were saying, how come the color is red when the trend is down or when the trend is up? And guys, we use a large chart, and your large chart is a slow chart. It's a very broad stroke of a brush. It's showing the general opinion of the market. We're going to find rules 1 and 2 on the large chart, but allow the large chart to define direction. Allow the large chart to define momentum, and allow the large chart to define the areas that could be problematic. Because it's slow and it's hard to stop when it has momentum, and it's difficult to stop when it has a clear path. So your first 2 rules are coming from the first bar on the large chart, and the background color is going to describe the trend. Your small chart, the second chart, and there's only 2, this is your refinement tool. This is where you're going to take that 1 bar from the large chart, giving you the advantage of momentum, letting you know what direction the trend is, identifying areas that could be problematic. And when the rules are met, this small chart shows you the inner workings of that 1 bar. And these bars typically have a pullback and a return back in the direction of momentum and path. And they look like little tails. This small chart shows you those tails. It shows you those retracements. And we use those to refine and define the best of the best entry in these highest probability trend trades. And because we refine that slow bar with 20 to 30 faster bars, guys, you can reduce risk dramatically. And it's actually going to give you the most space to get to your profit targets, to take advantage of that clear path. So I will encourage you, keep it simple. Learn momentum. And then when you learn momentum and you're like, okay, I get this lesson, I'm good with this, study clear path for a few days. Make sure you know the difference between a clear path and a termination condition. And now we're going into day 4 or 5, and you're like, all right, it's time for me to define entries. And what I find is that most users, if they accept that simplicity is the path of least resistance, most users can begin to pick out these entries pretty quick, within the first week or 2. So big chart, little chart. Only 3 rules, guys. Know where to find your rules. And then we're going to talk about the indicators that are on both of those charts before we get into the rules, just so you know what you're looking at. There are small triggers. These are solid lines. 2 solid lines work together to create the small triggers. They're a fast-moving average. They look the same no matter what time frame they're on. Then there's the large triggers. These are the big dashed lines. They're a slower moving average. They look exactly the same, whether it's a big chart or a little chart. All you need to know is small and large, and you're going to use them in everything you do. You're going to use them to define momentum. You're going to use them to define termination conditions. You're going to use them to define entries, guys. Triggers show up in everything that we do. Both charts will have areas. They have a different role. The large chart is going to use areas to define problems. The small chart is going to use areas to define entries. So they all have a name, and they're the same name no matter which chart. There's divergence highs and divergence lows. Divergence means there was a loss of momentum. So if there was a loss of momentum at a high pivot, you'll see a magenta line. If there's a loss of momentum at a low pivot, you'll see a cyan line or a baby blue line. You're going to see Fibonacci resistance, the red line that runs horizontal, Fibonacci support. You'll see yellow 1-to-1s. These are 100% Fibonacci alternates. These are like fibs that print in the moment, guys. And they're used by the institutions quite a bit and can create a bounce. And then also, you'll see the mid-band kind of running through the middle of the chart. That's just a moving average. And it'll be used as support if it's green and resistance if it's magenta. So we're going to use these indicators. You're going to remember where to find them, where to find your rules. And we're going to break them down individually right now. And what they look like, what they mean to you, how to use them. And let's do it with rule number 1, strong triggers. What's a strong trigger? It's that thing that gives us momentum. And the only way to have momentum on the large chart is if you're trading with the direction. So direction is defined on the large chart. The trend is defined on the large chart. Remember, It's a big, slow moving chart. We want that overall opinion of the market. So if it's green, it's going up. If it's red, it's going down. It doesn't mean that you have a trade, but it means that you know which direction to look for your rules to be met, to go with the market, to go with that big chart. Strong triggers in an uptrend means that your small triggers are above the large triggers. The large triggers must be wide, and there's some space that's created between the two. Those two trigger lines separate from one another. It looks a lot like scissors that have just opened, and it's that separation, it's that gap between the small and large that lets me know that the odds are favorable for the market to continue up. And in a downtrend, the small triggers are below the large triggers. It's the only way it can have momentum. Large triggers have to be widening. And then once again, it's that gap, it's that space in between the small and large. This is what lets me know that the odds are favorable for the market to continue down. So when I talk about the advantage of momentum, I want to talk about the advantage of odds favorable momentum. I want you to say to yourself, with this look, it's going to be difficult to stop that market on that big slow chart. With this look, the market's more likely to push in the direction of the trend. This is the same look that we rely on to break key Fibonacci areas. Guys, this is the look that'll even cover some of the mistakes that you tend to make as new users. So strong triggers is nothing more than a separation of the small and large. It has nothing to do with Fibonacci areas. It has nothing to do with those price bars, guys. It's simply a separation. And when I have separation, I have strength. And then when the separation goes away, when the smalls work their way inside of the large, this is weakness. So separation is strength. Together is weakness. Scissors open is strength. Scissors closed is weakness. And when I have weakness, anything can happen up or down. So you have to ask yourself, which look would I prefer to take a trade in? Would I prefer to take a trade when the odds are favorable for the market to continue in the direction of the trend? Or am I comfortable taking a trade where just anything could happen? And anything typically does happen. That is where key Fibonacci areas tend to hold. That is where retracements from the middle of nowhere tend to happen. And guys, if we look at crude oil right now, this is strength to the downside. This is strength to the upside. And the look is the same. Strength is always strength. Weakness is always weakness. So I have strong triggers until they become weak, and you'll notice that's where the reversal happens. And I have separation and the market pushes down, and when they return, that's where the reversal happens. And strength pushes up and the triggers work their way inside, and then we get this indecision, nothing lines up kind of moment. So could you guys give me a why if you are cool with the idea separation means strength? This is rule number one. It's rule number one for a reason, guys. It's hard to stop that market. But there's something that can, and we call these termination conditions. In a termination condition, it says termination false. I don't know why that wording always throws me off. When there are no termination conditions on your large chart, big chart, slow chart, no areas, guys, what happens is you have room to your profit targets. And when you have room to your profit targets, we're just going to call it a clear path. So I'm going to couple momentum, a market that's going to be so hard to stop, and I'm going to make sure that it doesn't run into anything that could stop that forward progress. Termination conditions are the horizontal lines on your large chart. It is divergence highs and lows, yellow 1-to-1s, red resistance, blue support. All of these areas are where decisions are being made by the people that control the market. The men and women, the institutions, the big money, they're making decisions right at these key areas, or more likely to. They're buying from support. They're selling from resistance. They're taking profits at these key areas. They're fighting one another at these key areas. So to define a termination condition, it's two parts. It's a two-part process. I would encourage you to write this down to learn this recipe. The first thing, price reaches the area. The large crowd, the people in control, push the market up, and price bars reach Fibonacci resistance. And once they do, we're done with price. Price is irrelevant after that happens. The trigger lines are going to tell the story. They're going to let you know if it's a termination condition, if it's been broken, if it has the potential to break. So if price reaches resistance, all I want you to do is ask yourself, hey, where are my triggers? And if your trigger lines remain below resistance, resistance is a termination condition. And there's four things that could happen, that may happen, that might happen. It could stop the market cold in its tracks and reverse it. And if it does, we call that a strong top, because it means that the decisions were so impactful at that key Fibonacci area that the buyers got overtaken by the sellers and the sellers reversed the market. That's a strong top. That's the precursor to the highest probability trend trade you could ever take. The market could create an untradeable bounce. Maybe the sellers give it a go from that key number and give you 2 or 3 bars down, and they might continue up, but it's enough to kill a long position should you decide to trade into that line. They could fight, and you see this a lot, where the market almost dissects the Fibonacci area, where buyers and sellers are duking it out for supremacy, and both of them want it to go their way, but neither of them can get the footing, and you don't want to be caught in that fight. And then it could break. Price could just blow right through and head to the next level. And the truth of the matter is that you'll never know what the reaction is going to be. Nobody's ever going to give you a heads up. You can't predict it because it's not predictable. But what is verifiable, what is repeatable, is that if price reaches resistance and your triggers remain below, you are more likely to lose than win should you decide to take a trade into that area. And then if it becomes a strong top and the momentum is down, maybe you find a trade in here, maybe you don't. And price pushes all the way down to Fibonacci support. And now we say it again, price reached support, where are my triggers? And if your triggers remain above support, it's a termination condition. There could be a fight, there could be an untradeable bounce. It could reverse the market completely. We'll call that a strong bottom. Or it could break. And the reality is you never know. You'll never know what's going to happen. So the easiest, the highest probability, the way to keep your money and not just arbitrarily give it away, is that if rule number 2 is not met, if the area is a termination condition, absolutely no trades into the area. And guys, this isn't based on the one time that it decides to hold or the one time that it decides to break. This is an 11-hour period in crude oil, and 36 times rule number 2 kept you out of a loser. 6 times the market broke the key areas, gave you your rules met, and produced money. 90% of your day is doing absolutely nothing. And these rules come to be not because of the one time that it holds, but because if you take 1,000 pictures and the rules are met for a termination condition, more often than not, you lose the trade. Is everybody good with that? Do you want to see how effective termination conditions are? From resistance to support to resistance to divergence low to resistance. Guys, rule number 2 kept you out of consolidation in crude oil. Rule number 2 kept you from hoping the market did something when your indicator said that it wouldn't. It did it again here. Resistance to support to resistance to support. If you have any experience in the market, you know how detrimental consolidation can be to an account. You know how easy it is to get chopped up. Rule number 2 helps keep you out of that chop. Rule number 2 helps you identify the areas that could create a big untradeable bounce. So that's what it looks like when they stop the market, when it's time to sit on your hands and wait for the reaction. This is what it looks like when it breaks. And they do break. All day long they break. So we're going to go through the life cycle of a fib breaking. And it starts with price reaches resistance. The price bars, the dynamic Renko bars reach resistance. And then we throw the price bars into the trash. We don't need them anymore. We're going to let the triggers tell us what's going on. If my triggers remain below resistance, resistance is a termination condition, and wait to see what the reaction is. Wait to see if it bounces, if they fight, if it breaks, if it rolls. You'll never know. So number one here is a do nothing scenario. Well, what's it look like when it clears? Again, it has nothing to do with the price bars. It has nothing to do with the color of the fib. It has everything to do with the trigger line location. So when your small triggers and your large triggers, both lines of each, get above resistance, resistance is considered broken. When resistance is considered broken, it behaves as support. And your path is clear. And your path will remain clear until you reach the next area. And once you get to the next area of resistance, guys, we start over at number one. Can you give me a why in the room? If you're okay with that, guys, first, be able to define when you shouldn't take a trade. And then, know the opposite side of the coin, what it looks like to have a clear path. Once you can tell the difference between the two, I love it when we have a quiet classroom. Once you can tell the difference between the two, you can identify the potential to break. That's number two here, guys. When my small triggers absolutely smash through an area, I'm talking 3 to 4 points, not prairie dog through it, not peek their little heads, but really get through, clear and decidedly. But my large triggers, my slow triggers are lagging behind. They're still below that area of resistance. This is what we call a 50-50 look. 50% of my triggers have made it through, 50% have not. This identifies, as long as there's momentum, that Fibonacci area has the potential to break. But it's only the potential. It's not broken because the large triggers aren't above. This is going to be the majority of your trades. You have to be able to recognize it and accept it as the potential, because these trades, any opportunity you find here, they must be managed assertively. So resistance, no trades, potential to break, trade away until you hit the next area, go in the other direction. First support is a termination. Every line you hit is going to be a termination condition for at least a second. Then it has the potential, but it's only potential, manage assertively. Then it's a clear path until you hit the next area. And there will be times when you are stuck like Chuck. There will be times when your path isn't clear because areas are stacked, because it's caught between Fibonacci areas. We saw a couple examples of that. Guys, this is 90% of your day. It's okay to do nothing. It's okay to sit on your hands. It's okay to not be active. 90% of your day is doing absolutely nothing. But the great thing is that the futures markets exchange billions daily. The S&P, on average, exchanges $173 million. It's okay to not be in every move. It's okay to not be the first one in. And if it's not perfect, it's okay to not accept the potential and sit on your hands. Because all you need is $400 a day to be a successful day trader, to be in a six-figure income. That's it. So we're finding the potential to capture $400 in between the areas with the momentum. And let's see if it's possible. AFLAB says, check it out, Mark. This is a one lot from 07 to 92, which is $150. Trading with momentum, with clear path, exiting at trouble. That's $100 and hold on, 7, 8. That's $150. Pretty cool, right? Double it. Take this trade twice. Take 2 contracts. AFLAB, you're what? You're a week into it, and you already understand the concept that that's your best look. That's outstanding. There's one termination condition that I'm going to talk about. Guys, this is a termination condition on any time frame, large or small. But you'll see it on the small chart first, and it's 3 divergences. 3 losses of momentum in the same price range can terminate a trend. And all it is your small chart giving you a heads up of what's happening on the large chart. You see how inside of this one bar that says down with strength, potential to break, you see all of this price action on the small chart. That's that refinement process. 3 divergences in the same price range, guys, that can stop a trend. This is your, hey, get out of that trade, or this is the, hey, don't take that next trade look. And it's just showing you change that doesn't register on that big fast slow or that big slow chart. So we have gotten to the point to where the large chart has defined the momentum of the market. It has said that we have strong triggers. The odds are favorable for it to push in the direction of the trend. We have determined that we have a clear path. that there's absolutely nothing in the way on the large chart that could stop the trend, that could end the forward progress, that could take away my advantage. And once I have momentum and a clear path, that's when I go to the small chart. There's people that will minimize their small chart, keep it out of view until the large chart rules are met. And the small chart entry rules are pretty specific. You're going to use a limit order to buy or sell a pullback in an area inside of triggers, guys. You're going to use a limit order, which means you're going to be able to wait for the market to come to you. And you're going to wait and you're going to let the market retrace. So when everything says up on the large chart, you're going to let it come down on that smaller, faster chart. You're going to take that refinement. And you're going to wait at an area, at a fib, at a midband, at a yellow 1-to-1, because the same way they can stop forward progress on that large chart, they can on a small. But when they do it on the small, that forward progress stops and bounces in the direction of the large chart trend. But the key is that they're inside of triggers, guys, and this is the most important part, because price returns to these large triggers. They're moving averages, and when they separate, they reconnect. So on your small chart, price typically returns to those 5-1 triggers, those large triggers. On your large chart, typically returns to the large triggers, and I'll show you exactly what I mean. Here's a large chart. Price accelerates away from the triggers, and it pulls back to the large triggers, and it pulls away from the large triggers, and it pulls back to the large triggers, and it pulls away from the triggers and the large triggers. Guys, it's repeatable. It happens over and over throughout the day, and we rely on it because this is how you're going to define where that retracement, where that pullback is most likely to go. So from the top of the triggers to the bottom of the triggers, large, these are both on your entry chart, and you'll be able to define exactly where the retracement is most likely to occur, where those down bars are most likely to go. If those triggers are overlapping one on top of each other, if the large from the small and the large chart, the large and the synthetic triggers as we call them, if they're one on top of each other like this, guys, you've got the smallest possible zone where that retracement is most likely to occur. And then when you put areas inside, you have the smallest little window where that market is likely to bounce and continue with the trend. So I love the phrase, I'm going to buy or sell a pullback. There's your pullback, the retracement that goes against everything the large chart says. And I'm going to buy it at an area, at a fib, at a midband, or a yellow 1-to-1, and I'm going to do it inside favorable large triggers. And this is where the advantage of rule number 3 comes in. So when the large chart rules are met, when I have momentum, when my path is clear, I'm going to turn my attention to the small chart. And only when my rules are met am I going to turn my attention to the small chart. Because the small chart has the sweetest siren song ever. And it's going to try to talk you into trades by presenting a great entry when you don't have those large chart advantages. So I'm going to make sure that my large chart rules are met. And on my small chart, I'm going to need a reversal bar because my rules say to buy a pullback. And there it is. One down bar after all of these up bars, going with momentum, going with the trend. And once I get the reversal bar, first I'm going to identify where the retracement's most likely to go, where that push down is most likely to go. And price tends to return to the large triggers. I know this. I believe in it. I've seen it. I've studied it. So I have large triggers and synthetic triggers. I'm just going to draw a box from the highest line of the large to the lowest line of the large, and this defines where the market is most likely to retrace. The tighter those trigger lines are one on top of each other, the smaller that area becomes. That will help with accuracy. But once I identify where the market may return, I need something for the market to bounce from. I need an area, a fib, a midband, or a yellow 1-to-1, and it's imperative that that area is inside of triggers. In this box, from the highest area inside of triggers to the lowest area, notice that I don't say from the fib inside of triggers. I don't say from the midband inside of triggers. I don't say from the 1-to-1s inside of triggers. These are all equal in my eyes. So from the area inside of triggers, guys, this tiny little box shows me where the market is most likely to bounce in the direction of the trend. With a little bit of study, you'll have the courage to activate a limit order. You will right click on your chart a couple ticks above that highest area, and you're going to say, all right, come get me, market. And now you've done all you can do, guys. The only thing you will ever be in control of as a day trader is whether or not you're following your rules, is whether or not you're trading your plan, whether or not your pattern is your pattern. And if they come get you, if price retraces to the retracement zone, if it hits your limit order, what happens is you're in a long trade. And you're in a long trade where the odds are favorable for the market to continue up. And you're in a long trade with nothing in the way to create a bounce on that trade. And you're in a long trade having entered right at the area where the market is most likely to continue. And this is your high probability trend trade, guys. And we haven't talked about anything other than defining entries. So we're going to do it both directions here. When the large chart rules are met, the reversal bar begins the pullback on the small, fast chart. The reversal bar is not your entry. The reversal bar is actually showing you a little loss of momentum so it can get back to that great area. You're going to see where those retracements are most likely to go. Somewhere from the bottom line of the large triggers to the top line of the large triggers. This is where they're most likely to push back. But triggers aren't bouncy. Hitting the triggers is not your entry. You have to define the areas. Fibs, midbands are yellow 1-to-1s. Sometimes they're one on top of the other. Sometimes they're split. Guys, if they're separated from one another, you're going to create a window. In this shaded blue box, somewhere within this range is where the market is most likely to continue, or it's most likely to bounce and go in the direction of the large chart trend. And because you know where the market is most likely to retrace, because you know where it's most likely to bounce, you're going to accept that anything beyond those triggers, anything beyond the triggers is not a part of the entry equation. It's not a part of that window. This is what we call where the market should not go. So this fib isn't an entry. This fib would actually end up being an exit because the market has gotten through everything it's likely to do, gotten to where the market should not go. So going the other direction. And I love this. This is futures. If you're new, we can do it both directions, guys. Rules are met on the large charts. Imperative. Have those two advantages. Reversal bar begins the pullback. It is not your entry. Define where the pullback is most likely to go with the large triggers, with the synthetic triggers. The trigger lines are not your entry. Define where the market is most likely to bounce, and that's the area inside of triggers. Fibs, mid bands, yellow 1-to-1s. This is a magical moment. There is one line, one area inside of triggers. Your job is to activate that limit order a couple ticks below it and just hope that you get your entry. Is it easier, Jerry? I've never traded stocks. So you say the up and down entries are easier than stocks. I love that. Guys, you'll find that I'm as ignorant as they come. I've never traded options. I've never traded stocks. Never talked to E.F. Hutton. But the one thing, the one advantage I have is I've spent 5 years studying patterns. 5 years studying and teaching this pattern. Anything on the wrong side of the triggers, anything above the triggers in a short trade is not where you want to be in the market, guys. This is where your advantage is gone. Rule number 3 is no longer in play. And you're going to use this idea, and this is the first talk outside of entries that we're going to have. I love hearing that, Jerry. It's 5 years, not as consistent as you are now. Once you believe that it's just a pattern, once you believe that the market does the same thing every day and you can find a way to capitalize, it takes all the stress out and you just trade your pattern. So initial stops, let's talk about a little bit of management. There is a saying, I Google a lot on how to become a successful day trader, mostly because I want you guys to be successful. But there was this thing that says, how you know you're becoming a confident trader. And man, I Googled this and I looked at it on 1,000 pages, it feels like. And one of the first things that every page said was that you manage your risk before you ever manage your profits. And I think that's true. And I think Nexgen really embraces that, because when you enter a trade where the odds are favorable for it to continue in the direction of your trade, you're managing risk. When you're not trading into areas that could stop the market, you're managing risk. When you're waiting for the highest probability entry, you're managing your risk. And when you take it to that next level, when you put your initial stop where your advantage is no longer present, where the pattern has broken, if you will, guys, placing your initial stops where the market should not go, it's generally 4 to 5 ticks. And in a pattern that has been proven, that has been verified, that is repeatable and testable, to win up to 70 to 80% of the time, you begin to understand that it's okay to lose 20 to 30% of your trades. It's all right to not get a winner every trade. That losses are not a failure, but rather they're a cost of doing business. So by defining where the market is most likely to continue, you have automatically defined where it should not go, and this is going to help you take smaller losses. And then I think Pete put a quote in here. In trading, you have to be defensive and aggressive at the same time. If you're not aggressive, you're not going to make money. And if you're not defensive, you're not going to keep money. All right. That is the opinion of Ray Dalio. And guys, there are a million opinions out there. Read them all. It's like watching Fox and CNN. Truth is probably somewhere in the middle, guys. Read everything, study everything, find what works for you. And that's what we're doing with the software, right? He's a legendary trader. I love it. I love reading stuff like that. I really do, because you take something from everything if you listen. This is how you're going to study the patterns, guys. This is how you're going to develop trust. This is how you're going to... Can you guys hear me? Give me a Y if you can hear me, please. There's a good chance that Ron's just old. Thank you, Kristen. Kristen, I love that you don't say anything, but you always have my back when I'm doing a sound check. Thank you for that. All right. If it's no audio, guys, reboot your Discord. Because if half of you can hear me, the other half can't, I'm going to reboot mine. So no sounds. Okay. There's too many of you. I'm going to reboot. It will bump you. Please come back. Por favor. And YouTubers, I apologize for the little problem that we're having here. But we're going to get it, and we're going to get them back quick, and life will be good. And we will sing songs about rainbows and unicorns, and it'll be awesome. Dun, 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 dun. Education room, start the stage. I'm back. Dun, 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 dun. Can you guys hear me now? We solid? We good? We happy? What do you guys think? I'm talking. Can you hear me? Give me a Y. Kristen, you're my new favorite today. Joel, always. Okay, good. We're back. And guys, please always do that. If you ever can't hear me, don't just assume that I'm not talking. Post it in the room. Go, hey, Mark, I can't hear you. And then I'll ask everybody. I'll say, hey, can you hear me? And you'll see all these Y's coming up. Yeah, and then Jen's doing it wrong. So she'll reboot herself. After I reboot, that typically fixes it for 90% of everybody. Annotating a winner. I love it. Guys, I don't know what else I can do. My audio's on. Most of you can hear me. So if you still can't, kill Discord from your task manager. One second. we go. So hopefully that's helpful for you guys. So let's talk about studying, guys. How do I study this? How do I become comfortable with it? This is the easiest way. I can kill mine again. All right, guys, I'm gonna do it one more time. All right, are we back? Are we good? Are you there? Am I here? Yay! I love it. So guys, if you do kill it, I left this up. If you do kill it in your own Discord, this is the apps. But come down to the background processes and make sure that Discord isn't running back here as well when you do the kill. Good stuff. All right, back to study. How do we do it? Guys, how do I become a great chart reader? How do I become confident in patterns? How do I recognize this pattern quickly? Because the reality is if you're brand new, that market is screaming and it's scary and it's harder to make decisions. So go back historically. And when you see momentum and you couple it with a clear path, you're going to see that tail that sprouts off of these bars. And only when the rule's met. Circle it. And if that circle lines up with an area inside of triggers on the small chart, well, that's your pattern. This is the pattern you're looking for. This is the highest probability trend trade pattern. So we're going to go through and do that. We're going to say, all right, with odds favorable momentum, and the market's been a little sideways, and the potential to break, and boy, they're making us embrace that 90%. What does that circle look like on a smaller, faster chart? Well, there's really only one way to find out. Let's scroll back and find that circle. And here it is. And guys, this is for my new users. Can you give, let's go through and let's take the picture together. This is how I want you guys to annotate. I want you to say, okay, it's a strong top. And I want you to define and put an arrow on it and say, this is momentum. We'll call it strong triggers. We'll use the language. And then I want you to say, not broken, potential to break, I might need to manage. Is everybody with me so far? This is the perfect annotation. Do you see the circle on the tail? It lines up with an area inside of triggers. So this is the most important language I think you can use as you're learning this pattern. Entered on a pullback at an area inside of triggers. And this is how you're going to study. So FIA and AFLAB, if you're choosing to take this trade, large chart has momentum and the potential to break. Circle the tail. You don't have to be in a trade to do this. Entered on a pullback in an area inside of triggers. This is your pattern. This is the high probability trend trade pattern. This is the pattern that you should put into your trading plan. And you should call it perfect and say, don't miss this. In this picture, should look just like this picture in your trading plan. Odds favorable, clear path, pull back to support. And you can go back and you can do this over and over and over, and you never even have to take a trade, but you can build that recognition, guys. You can get everything you need from a picture. And what it does is when you go to the live market, let's go to the live market, you can say, my smalls are below the large, it's coming down, there's nothing in the way, and it's pulling back towards areas. But it's only the potential, it hasn't gotten through. And you can go to the S&P and you can say, wow, weakness, look at that pullback. And now it's heading back up towards Fibonacci resistance, and you can read your indicators quickly. And there's a little baby tail with all that momentum and the potential to break. And I'm not sure that would have been an entry for anybody because it didn't make it to an area inside of triggers. And then I pull back. They got a little range bound there for a second. And I see this one, and this was not long ago. Hasn't quite hit the fib, has the potential to break this one. What's it look like? 802. Does everybody see it? It's a pullback directly to support inside of triggers. That's your pattern, ladies and gentlemen, and that's all we're doing is we're trading patterns. The market has a memory. Patterns repeat themselves every day. So how do you get good at it? How do you get to where you can recognize these patterns quickly? Well, it starts with this one, Chart Reading 101, guys. I put this together for new users. I hate that half the class didn't come back. The goal is that you look at your large chart, that you let the large chart lead the way, guys. Identify momentum and path. It's the core, it's the foundation, it's the one that opens all the doors for you. So to get good at momentum and path, take pictures of strong triggers, identify them, draw an arrow, say these are strong because there's separation, because they're all the same color, because they're going up, the scissors are open, whatever you have to do to create the correlation between the look and what it means to you. Do it with weak triggers, clear path, terminations, and post those pictures in your spreadsheet, guys. Go back to that first page. I've given you a huge head start. But start dropping those pictures in there and study them just a little bit each and every morning. And what happens is you'll never make the mistake of trading into a termination condition believing it was a clear path. And you'll never make the mistake of trading with weak triggers when you were supposed to be waiting for strong triggers, because that repetition is going to create the recognition. And as you take those pictures as a brand new user, I've given you a high probability trend trade checklist. This is a checklist designed to optimize your chances of success with this high probability trend trade. And it means that the best of the best comes from a strong top or bottom. But it's not mandatory, guys. That's not a rule. But a strong top or bottom is always the same recipe. It's a termination condition that the triggers did not break. And it reverses the market. And this is a 7-bar wait for it to become a strong top. First it's a termination, then it's a strong top. First it's a termination, then it's a strong bottom. Do I have momentum? Or is it weakness? Know the difference. Am I trading into a termination condition? I hope not. Does it only have the potential to break? I might need to manage. Or is it a clear path? And if it is a clear path, guys, I'm going to wait for the pullback to an area inside of favorable large triggers. I'm going to activate a limit order a couple ticks below, a couple ticks above, and I know darn well where the market shouldn't go if this is going to be one of those winners. So use these to help you take those pictures, and then print out the second page. The second page is the best of the best, guys. This is the entry checklist to get you into the highest probability trend trade. Nobody has ever followed the rules on this checklist, made yes dashes all the way down, and done worse than 70%. And let that sink in for a second. In a business where the goal is to win more than you lose, are you guys kidding me? Can you guys give me a Y if you can hear me? Can anybody hear me? Aaron can hear me. Aflab can hear me. This is my old people. Algo can hear me. Joel can hear me. So guys, for those of you that can't hear me, I apologize that we have to go through this. But I'm going to do it again. Steve, click on your headphones. I'm going to exit real quick and come right back, guys. Be right back. All right, here we go again. Hopefully we're there. Guys, this checklist is designed to get you in. This checklist is designed to get you into the best of the best trade. And that checklist is the same thing that you're going to find on the plan that I give you here. This is the KISS plan. Guys, this is the best of the best. This is your foundation, guys. This is your stepping stone in your learning journey. Take it easy, Ron. It's designed to optimize your chances of success with a high probability trend trade. Ladies and gentlemen, I've had people in their first 30 days with Nexgen get funded in those prop firms just following this very simple plan. Through simulation, study, class feedback, continuous practice, you'll have the opportunity, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. And that's just an AI-generated wordy way of saying, when you can read your charts, when you can identify these advantages, guys, you're going to see patterns outside of this trade. You're going to see more trades, more opportunity, different management opportunities. But until you can, this is what optimizes your chances of success. And that's what creates confidence. So there's two things that you need to know before you sit down and you're not on simulator. And I put that in there for a reason. Because if you're on simulator, AFLAB, FEA, Aaron, man, just screw it all up. Break everything. It's simulator. You can't lose money. You can't lose your house. They won't repo your car. Your wife won't leave you. It's practice. So practice it all until you can do it correctly. Why will I enter a trade? The only answer is because my rules are met. Because my rules are proven. Guys, they've been proven to win more than they lose. I have trust in my rules. I've back tested it. I've verified it. I have gone through everything that I need to do to trust it. And there is no reason to not enter when the rules are met because it's been proven to win more than it loses. And that helps remove emotion. Because you realize that anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time, which means you accept that you will never know if you're going to take a winner or a loser. The only thing you can be sure of is if you have those advantages. And then you have to know why you'll exit, guys. And this is why I speak in terms of advantages so much. Because exits are taken either at profit targets or when the advantages that had you enter the trade have gone away. Your initial stop 4 to 5 ticks beyond those triggers is a great example of that. You can have momentum and you can have a clear path and you can get in where the market is most likely to continue. But if it goes 4 to 5 ticks beyond those triggers, your advantage is gone. Rule number 3 is no longer in play. And you can make the choice to exit that trade because it's not as good as it once was. So entries are an entire hour each and every morning. Entries, defining the advantages, knowing where to get into the market. And then once you're in, you've got to manage it. So I've written this KISS plan, and I wrote this years ago. And it's designed to be used with 2 contracts. The first contract is designed to get you paid. The second contract is designed to build trust in the large chart. So the KISS management, it's designed to help you understand and trust stop placement where the market shouldn't go, use that language, but it also gets you focused on getting paid. It almost seems comical that the average trader has such a reluctance to take profits because they believe more profits are coming. Learn how to get paid, guys, and then you'll learn how to get paid bigger. And you'll create your own management plan, and it'll be based on what you see, how you read the indicators. So this very mechanical plan is if-then. That's all it is. It's designed to remove emotion, to eliminate on-the-fly choice making. And it's dependent 100% on getting into the market where the market is most likely to continue. So if my entry is 2 ticks below resistance inside the triggers, then my initial stop is 4 to 5 ticks beyond the triggers. This is where the market shouldn't go. And you will know your risk before you ever enter. You have to accept that risk. Because if you try to shorten it, if you try to make it less, and you put your stop in the retracement zone, it's likely to get hit. And if you put it below an area inside of resistance, it's likely to get hit. And then the market could just bounce and go without you. And then you get frustrated and you make emotional decisions. So know where your stop goes, accept it. Targets are predefined at 100 and 200. Remember, we're learning to get paid. And guys, this is $150 per contract of risk on this trade. But this is a trade that typically wins 70 to 80% of the time. I'm cool with that. And here's the great part. If I don't get stopped out, it means that the market's going down. It means that I get a reversal bar. And I'm going to redefine where the market should not go. I'm going to put my new stop 2 ticks above that reversal bar because now it's going down from the area where it was most likely to go down from. And it's going down with odds favorable momentum, and it's going down with nothing in the way. And guys, now I have $30 of risk on this trade per contract. And that's not a lot. And it's not uncommon to see you brilliant people take these sniper entries, and even though things go south, give up 20 or 30 bucks because you trust the plan. If it doesn't hit that tiny little stop, it means that it goes to the first contract, guys. And this is where you're learning how to get paid. If price reaches your first target, one contract is automatically, it's removed. You're done. That's it. The money's in your account. You're a winner. That builds confidence. And with one contract remaining, you're going to move your stop to break even. And no, that's not the best stop. It's not at all. But guess what? With no risk on the trade, with profits having been taken, you're more apt to hold for that second target. You're more likely to hold out, to trust the large chart's momentum and path, and try to make it to $200. And if you don't get stopped out, and it makes that $200 target, guys, that's a $300 trade. That is one trade, 2 contracts, 3 minutes of your life, $300 in your account. And that $300 in your account, guys, if that's the best you pull off every day and you do it consistently throughout the trading year, that's a $75,000 year based on about, I don't know, 90% chart reading and 10% being active. And it's really about 98% chart reading. Take a second trade, make $100. Now you're in 6 figures. The goal isn't to make all the money in a trade. And there's a lot of you that have that mentality. I'm going to hold through fibs. I'm going to hold without momentum. I'm going to hold through divergences because I have to make it all now. The futures markets might stop trading this afternoon. I may never have another opportunity. It's just not true. Make it consistently, guys. Make it in and out every day. Make your money. And what happens is when you have your plan, you trust your plan, you're consistent in making money, use a trade copier. Pete, who just posted in the room. Pete, I hope you don't mind me airing your dirty laundry. Pete uses a trade copier, which means that when Pete takes a trade, well, that's a not trade, and he makes $100 on it, he's got 10 mirrored accounts, which means Pete made $1,000 on that trade. And guys, that's a beautiful, beautiful thing, because once you're consistent and once you trust, you'll find a way. And that's really my first hour, guys. I promise you everything you need to be successful with the software before we take the first break, and that's what we've done. So we're going to recap. We've learned the trigger line and Fibonacci rules for when it's okay to trade. Guys, don't bypass this part of it. Learn these rules, learn this pattern, and it's going to open the door for the rest of the patterns. If you're chasing money, if you're looking for the end result instead of the process that creates it, you're less likely to get to where you want to be. Please simulate, practice, post in the room, get feedback, make sure you're reading your indicators correctly. I'm here 15 hours every week to give you that feedback. We've simplified. You now have a plan that defines entry, a plan that tells you how to manage it, and it's the plan that opens doors to build your own plan. The only thing that you don't have is the repetition. The repetition to feel comfortable, the repetition for it to be easy. I've just dropped in the room a zip file. Inside of that zip file is Chart Reading 101, is the High Probability Trend Trade Checklist, is the KISS plan. It's even the PowerPoint that I used to teach each and every day, guys. The only thing you don't have is the repetition. So work on the repetition, get the repetition, embrace the repetition. And then there's one more thing I'm going to say, then I'm going to take a break. And this is as we go into the second hour, because the second hour is dedicated to your chart reads. The second hour is dedicated to the trades that you take. So I'm going to remind you, new users, the key to everything is a foundation. Understanding the basics and compounding, moving forward a little bit each day. So for you new users, I do blanket you with very conservative rules. And I ask you to focus on the recognition of advantages rather than the monetary gains in your beginning. And I hand you a solid plan that optimizes your chances of success as a new user. So for you new users, it will feel like all termination conditions, no momentum, areas outside of triggers. It's going to feel like they're all bad. And that blanket rule increases the likelihood of your success, and that success is what's going to breed your confidence. But they're not always bad, and you'll see it as people post in this room, people trading into areas, people breaking your rules, but your rules aren't their rules, guys. Don't be the trade police. Learn the process that yields the results. The results seem to follow. This is where the KISS plan comes in, guys. If you can keep it that basic, if you can not overthink it, if you can insist on these advantages, follow simple rules, and be okay with not looking for every move in the market, but rather the best moves, you can find an extraordinary level of success. I've watched it repeatedly over the years. And the further you deviate from simple, the longer it tends to take you to recognize advantages. But the quicker you learn the advantages, the faster you break out of that little shell of the high probability. So question everything. I encourage it. I want you to learn, but I want you to remember that you're new. Give yourself a little grace. You are new. It's okay to be new. And guys, being new is like being new at the job. Mess it all up. Make mistakes. Break things. I had a manager once, and this is a little off color, and I hope you're okay with it. When I became a manager, I was a GM for restaurants for years and management. And when I went into management, my mentor sat me down and he said, Novak, he goes, there is nothing you can F up that I can't un-F. Hopefully you know what the F stands for. And guys, it was one of the most wonderful things in the world because it freed me up to make mistakes and then to come to him with those mistakes and say, how do I fix this? And he did every time, and he never got mad. And that's my promise to you. There's nothing you can do wrong that I don't know how to fix already. So if you post it in the room and you get that feedback in the second half of class, we're going to find a way to fix whatever is challenging you. So go stretch your legs and take a break. I'll be back in about 5 minutes, and we'll just start clicking on charts, guys. We're gonna get going. I'm gonna start clicking on the pictures that you guys have posted in the room. Remember, I'm gonna talk about momentum, path, and entry. I'm not gonna play the trade police. Not at all what I want to do. Faya was in here, and Faya said, check it out, Mark. Odds favorable, strong bottom. Enter at the area inside of triggers. And can anyone recognize the one challenge to this trade that produced that loser? It's that termination condition, guys. It's rule number 2. It is that price reaches a divergence high, the triggers don't break, and guys, no matter how strong that bottom is, no matter how much momentum you have, this is an area that can stop the market, and that's exactly what it did. And this is what we call avoidable losses, guys. When you knowingly break a rule, and I don't know that this was knowingly yet, because when you're brand new, you're going to make those mistakes. But if you take the time to annotate, if you take the time to write on the chart, to talk about what you saw, to talk about what you did, what you'll find is that you can begin to avoid this mistake, that you can begin to not trade into termination conditions anymore. All right, Wayne is probably going to check this on YouTube. So we'll go through. All right, weekend triggers. Let's see what he did. So Wayne took the trend trade directly into termination conditions, and that one worked for him. Oh, no, he didn't. Wayne took the short trade off of the termination conditions. Forgive me. Triggers directly into a fib, directly into a fib, directly into a fib. And Wayne said, man, I can't go long. Let me see if I can make money short. And he does, and he makes it right down to the trend trade. And then he says, I don't have to hope stuff breaks. I can let it break. And he does, and then Wayne tried to take a momentum trade without momentum, and it just didn't work out. And guys, those of you that are just jumping in, those of you that are jumping in and hoping that momentum carries you, make sure you have momentum. Because when anything can happen, it's crazy just how often it does. And this is an avoidable loss. Jumping in without the advantage is just hope. And hope is a horrible way to build a plan. Weak triggers, everything's going up. And then Wayne says, with a high volume area, it's a different style trade. Market was moving fast. Triggers are going crazy over here. Glad it worked out. Doesn't fit any rules that Nexgen teaches. But nicely done. Momentum trade with entry based on market flow indicator, all 3 charts. So momentum on all 3 charts. I hope you guys are seeing this. With all the momentum, nothing in the way. It's easy to catch profits, guys. It's easy to find a way to capture just a little bit of money here and there, riding that momentum with nothing to create a bounce. And then momentum here, and he gets in somewhere. Looks like he just jumps in with momentum again and exits. Was trying to talk you into the trade, but entry on the wrong side of the triggers, barely enough room to make $100 before the fib, let alone that. He just didn't take it. 50-50 trade potential there. He chose not to take it, and that's okay. That means that just wasn't his money, even though the market went up. Wayne, great trading. I don't know where you see weak. You're drawing weak. Smalls below large, smalls below large, smalls above large. I don't know what you're defining as weak here. Okay, weak tops and bottoms. Gotcha. I was like, I don't get it. So this would actually, no, it wouldn't. Yeah, you're right. Weak tops and bottoms. Thank you for the clarity. Smalls on the wrong side of large, so it's not momentum up. and it's not momentum down, and it's not a clear path. And you'll notice that Wayne doesn't have a trade here. Yeah, and you'll notice that Wayne is still positive because he's not hoping the market does something that his indicators say is indecisive. Great job, great patience on that one, Wayne. And then smalls below the large, potential to break. And Wayne says, I don't believe it. This is way too much range and too much risk. Let me catch it on the way down. The large chart says down, but let me catch it on the way down instead of hoping on the way up because it's not perfect. Great money. And then Wayne says, pivot, stop out, weak triggers. So termination with weak triggers. And Wayne says, I'm going to try and make a little money the other way too. And you did it really nicely, Wayne. The old heartburn. And then miss the prime chili dog. And then large sugar line wasn't given the warm fuzzy. So you get in on an up bar and you manage to get paid. And then make a little money on the second stop. Nice job, Wayne. Great trading. Great trading this morning. And great patience when it wasn't right. And guys, that's the hardest thing you'll ever do, is absolutely nothing. And I gotta tell you, it's nice to put a face to the name. Nice to put a face to the name, Wayne. All right. Got a few of them from Joel here. Let's see what Joel's doing. Odds favorable. Not quite a clear path. This is one of those 50-50s. Smalls are above the fib, larger below the fib. Joel says, let me get in at the areas inside of triggers and let me find a way to make some money. Nicely done, Joel. Great looking trade. Strong triggers down here for sure. Weaker triggers up here. And it's an interesting look. It is a pullback to an area inside of triggers, but it's potential to break, and it's not the momentum that we look for to break it. And you've already had 3 divergences, and Joel, you may have gotten away with one here. May have gotten away with one there. You didn't have momentum or path. Here you have momentum and potential. Beautiful entry, out of trouble. Nicely done. And I love this picture. Reversal bar starts the pullback. Limit order waits at the highest area. Stop placement where the market shouldn't go. Just confirming those entry rules to make sure you know exactly what you're doing. Great trading, Joel. Nicely done. And ladies and gentlemen, this is all we do in the second half is I click on your pictures, I look at them. I read what you say, I compare it to what I see, and we talk about it. If there's anything I can do to help, I try. Bob, be the man. Why you took this trade. Weak top with 3 divergences on the small chart. I like it. So the large chart overran. The small chart said, hey, that could be it. Large chart rolls. Odds favorable momentum and the potential to break this fib. You take a quick little pullback and ride it down to the fibs. Nicely done. It's a great trade. Nicely done, Bob. Easy $600. And Andy with his rule breaker this morning. No path, no momentum. Shouldn't have made this move. Been so long since I made a choice this poor. The only advantage was a strong bottom. Didn't have momentum, no room to go anywhere, 3 divergences, and Andy said, I sure hope this one works out. And I love this because Andy didn't just get mad. Andy said, hey, here's what I did wrong. This isn't the right trade. I know it's not the right trade. I had an emotional moment, and I'm going to take the time to identify the challenges, and I'm going to reinforce that my rules are important to me. So Andy, not mad that you took it. I love that you went back and you talked about why you shouldn't have taken it. And that's going to reinforce the rules following and make it easier to follow those rules. Nicely done. All right, Pete with a 4 shot here. Strong top, momentum and room to the target, and Pete takes it all the way down to the target. Momentum and path, guys, perfect. And then Pete decides to trade into the termination condition against the large triggers. And I'm glad it worked. I'm glad that termination condition didn't stop the market and you managed to capture a couple bucks. Breaking rule number 2, having a reason to do it. Odds favorable momentum. It already closed the gap to the large triggers, and Pete says, I'm going to see if they go retest the area, and that's exactly what they did. Nice heads up. And Andy says it's so much harder to get green with those dumb moves. Andy, that's one of the biggest things, I think, is it's rarely not finding the right trades that keeps me from moving forward on a day. It's forming an opinion. It's taking the wrong trade. It's forcing my good trades to undo my bad trades. And I still take bad trades. I think we all do. Strong bottom, odds favorable, room to that fib, and you just nail it. With all that momentum, guys, you will find a way. Momentum, potential to break. 3-tick winner. Second trade. Great loss of momentum recognition. Then it turns into the trend trade and you write it down. I like it. I don't know about the 3-tick winner. That's weird for you, Pete. And that's that idea that if you let the back of the bar clear, like there's your momentum trade. It just didn't work. It turned into a trend trade. Great heads up. Great heads up getting in there. Termination. Not strength yet. So guys, this is a trade I like this trade. This is a no triggers through termination. The small triggers roll on the large chart. And Pete essentially just sells a pullback to those small triggers. And this is a trade, believe it or not, this is a trade, this look is a trade that Nexgen introduced and started teaching in 2004. And Pete, your execution on it is beautiful. Let Fibonacci resistance hold, sell the pullback to the small triggers, get paid at trouble. Fibonacci holds, sell the small triggers, get paid at trouble. I don't know that you could have done that one any better. And guys, this is a great way to take advantage of that first move off of a fib. Nicely done, Pete. Let's see where we're at. AFLAB. Are you in here? It's gone. All right, so this is the idea. And the question was great on this one. The question was, why is the trend going against the background? And what he was talking about was, why is this market pushing up here when the background is red? And this is a great question, guys, and it's a great example. If the background is red, the trend is down, and we use that as a general guideline to keep us focused on having advantages, because the only way you can ever have strong triggers is if your trigger lines match the background. And then what AFLAB was seeing here is when price reached Fibonacci support, and those large triggers were way up here above that reversal bar marker, there was a full bar's worth of space to get back to those triggers. That's what we call the gap theory. And the gap theory says if price accelerates from the large triggers, it's likely to close the gap back if it hits something. And so AFLAB went long because this looked long. And the problem is it fights momentum and it fights trend. And it's an aggressive, it's a counter trend trade. So looking for an opportunity, divergence from the fib, and getting in sooner, giving yourself time to close that gap, at least gives you a fighting chance on that counter trend pattern. But that's why this appears to be going up when this says down, because the general consensus, the big picture, is that that market has started a downtrend. Great picture. Good question on that one. And that's just, it's a matter of remembering where trend is defined. And trend is defined on that large chart. And he says, Mortimer, we're back. Everything says up. The market's going up. There's nothing in the way. And Andy says, check it out. Let's make some money up to the fib. Nicely done, Andy. Making a mistake isn't the end of the day, right? Making a mistake just means you made a mistake. Tape up, play hurt, learn from it. Annotate it, talk about it, learn how to avoid it again. No audio again? Son of a bitch. Pardon me. Can anyone hear me? Is anybody? Jen's got me. You know what? I'll reboot again. Let's reboot again. But it's killing my classroom. It is killing my classroom here. Sorry, YouTubers. Not appreciating all the technical difficulties. All right, can you hear me? This is a hard way to run a room. I'm glad you guys can hear me. Man, I don't believe it's on my end, because if someone can hear me, if you can hear my voice, if it's getting through to half of you, it's probably not on my end. It's probably on your end. But whatever, we'll get it worked out. Everything says down. That's the same trade. And then oil stuck between fibs. Good picture. I don't know. I don't know how it could selectively pick. It's the server. And false breakout. Not even close to a breakout, Pete. I'm going to disagree on the false breakout. It's just directly into a termination condition with absolutely no momentum. No reason to have any thoughts about that market breaking out. It's just caught between termination conditions, guys. That's all it is. It's not at all. So a breakout, that would be a false breakout down here, where you have that momentum when you start to clear and then it ends up going up. That's a false breakout. That's smack dab into a termination condition with no momentum. That's a sit on your hands. That is the no reason to give your money away. And that's the picture that I started class with, guys. What you're looking at on that chart is the exact same thing that's on the chart used in termination conditions from 2022 in crude oil. It's the exact same look, 100%. Just reminding us that we trade patterns. Guys, give me 1 second. I left my water in the other room and I'm trying to choke. Can't take that much allergy medicine and not have super hydration. All right, guys, I'm back. Sorry about that. Good lesson there. Great lesson on patterns, I think. And great recognition that there simply isn't a trade to take. And guys, that's the case. Sometimes there's just not a trade to take. Man, my class started at over 30 and I'm down to 14. Discord's upsetting me. All right, Miss Adriana, let's see what you did. She's already gone for the day, but she watches the videos to get her feedback Good top. I'm going to disagree, Miss Adriana. What you have is a weak top. You have weak triggers. It's not coming from a fib, but the triggers do roll. And when the triggers roll, you find a way to capture. They pull right back up to it. Price pulls to the large triggers, so you catch it on the way down with the trend, with the beginning of momentum, and you take it off right at trouble. And I think it's a beautiful trade. And the only thing that I have to disagree with is it's not a good top. It's just a top. It's just a little reversal in there. Beautiful trade though, really nicely done. With momentum and room to the next areas, you find a way to get in. You find a way to get paid, and that's kind of what we do, guys. And then another one, Miss Adriana. There's that gap theory. It went back to the large triggers. So just a little bit early on the gap theory, but once it closes the gap from that strong bottom, it sure enough, it just rockets up with momentum right to the fib, and you just capitalize beautifully. Another great trade, Adriana. Great patience. Waiting for it to be perfect. I like it. And I am lost here. Let me figure out where the pictures are. There we go. AFLAB. We talked about this one. With momentum and nothing in the way, just absolutely gorgeous use of momentum on the way down. Nicely done, AFLAB. And then Pete, momentum, not a clear path. Connection. But with all that momentum, you say, I'm going to give it a shot. And once that momentum starts to wane, you choose to exit. Nice one, Pete. Termination ends up holding. Termination. And that's why you get out at the loss of momentum, because we're here to get paid, right? I told you guys, that's the hardest lesson you're ever going to get, is being willing to exit a trade. Great job, Pete. Great discipline. Being willing to take an exit instead of hoping it does something. Bob B. the man. Let's see what you did. Amazing top. All the momentum. Perfect entry. So, Bob B., are you in here? And I just have to say it. Wouldn't it have sucked if it bounced off the top of those triggers and continued down? Wouldn't have that been just an absolute pain in the butt? Would it have been worth the 30 bucks that you saved? And granted, it worked this time, but I have to point that out. And one of the things that you got into here, Bob, this isn't a rule or anything. This is an observation. When you have a market that's caught in a range, and there's your range right there. So this trade that you took, this is the old breakout fake out, as John Novak calls it. And what it means is that market's consolidated and it's been stuck and it's been range bound. And what happened is the sellers thought they had it. The sellers thought, yes, we cleared the bottom of that range. Here we go. Here's the momentum. Life is good. And just like you, a lot of people said, yes, here we go. And Bob, on this look, it's one of two things. It either runs like a scalded dog and it's a huge fast winner, or you get absolutely run over instantly and the market ends up going up. And it's wild because it happens a lot. Let's see if we can find another one of those consolidations. Caught in it and they try to break out, and there was the fight, and then they did end up going. And And there's the consolidation. And that was the first where you thought there was going to be a breakout and the fight happened again. And then it really broke out. There's that range again. And the sellers think they have it and the buyers take over. And it's one of those things that's not a rule by any means. But it's one of those patterns that you can start to recognize. When there's a big fight, the other side doesn't always give up as easily as you'd like them to. It's a great trade. And let me say that. You had every rule met, and it was the perfect entry. And nobody likes losing, but man, that's a great loser, Bob. I would lose that one with you all day, every day. Because it was perfect. And then when there's momentum and path, you will find a way. Base hit times 4. Ron's trying to get to the beach earlier these days, trading 4 lots. I love it. I never saw these trades until I learned the high probability trend trade by heart. Thanks for the teaching, Puma. I love it. Good stuff. Finding a way with momentum and path. I feel like I say that a lot. Finding a way with momentum and path. Finding a way with momentum and path. And when you don't have it, don't worry about it. And look at that. There's those 3 divergences, right? Bob, that was your perfect trade, I think. Or it looked like it over here. Same look. Range bound. And they're trying to get that breakout. And the buyers fight. And Pete does a great job of saying, man, I'm not going to take that short. Not after 3 divergences. I'd rather sit on my hands and wait for it to be a better look. Great picture, Pete. I'm a big fan of the pictures where you don't trade. Not you specifically, Pete, but in the room. Taking a picture and just saying, man, my rules aren't met. Let me take a picture and write why they're not met, right? I still have strong triggers against me. Instead of taking the trade hoping that it works out against them, let me take a picture and remind myself that this is where I lose more than I win. Great job. And then Ron says, with momentum and a clear path, life is easy. And that's another base hit on a 4 lot. And I want you guys to see something. Base hits pay bills. So take this to heart. This is momentum and path, and that's a $550 trade in a couple seconds. That's momentum and path, and that's another $550 trade. And guys, that's $1,100 being active in the market for about 25 seconds. Waiting for the perfect opportunity with all the momentum and nothing in the way. That's $1,100, guys, and that is momentary. And they look exactly the same. It's a lot of wisdom there. You don't have to have $800 moves. Take a $100 move 4 times. Andy, everything says up, and you're on the wrong side of the triggers for entry, and it dances. It dances, and I'm sure there's more to it than I know. And nice job getting paid. Buying a mid-band in a strong trending market. Huge retracement against it. Andy, I don't understand the hold. I know you have reasons for it, so I'm not going to judge. 3 divergences say no more longs. 3 divergences say no more shorts. You think with that large chart, you get a downtrend, but nothing but chop, eating you up and spitting you out. Amen. If you asked all 14 in the room, who's ever lost a lot of money in a choppy market? I have. Because you go, well, my rules aren't met. Let me start trading my opinions and see what happens. And I don't know about you guys. My opinions just don't produce results. I wish they did, but they don't. All right. Trend trade confirmation bar since it didn't quite get to the mid-band. So I like this. Odds favorable. Everything says up. No divergence. And Wayne didn't quite get his entry. They missed him at the mid-band. But he goes, but if I had entered at the mid-band, this is my trade. And just rock it out. And then divergence on the 50-50, Wayne. It's all right to exit sooner. Because your entry is right at the 50-50, or your exit's right at the 50-50 entry. Normally, I'd see you take an entry just above that. Move fast. All right. Yeah, sometimes you don't have a choice. And there we go. Wide open, nothing in the way, and just easy money. You were moving the stop and it came down. I've had that happen. I'm like, oh, I need to move my target further out. This thing's screaming. And then you hear target filled. You're like, crap, that was fast. What a great problem to have when it goes in your favor, though. And Wayne, this is just beautiful. Everything says down. There wasn't a darn thing in the way. And you're like, what an easy way to make money. What an easy way to use these indicators to recognize that advantage and just capitalize on it. And you did it going both ways. Outstanding trading, Wayne. Good job. And that's all my pictures. Strong bottom, 50-50. If you took the first one, you had a shot, and now we're getting a couple divergences, few losses of momentum on an area that's not broken yet. It's all right to let it roll. It's all right to let things get back in favor of it. And then the same thing here. We have momentum. It hasn't hit the fib. Let's just jump in for grins and see what it does, right? And we'll say that it closed on the wrong side. Whoop. Well, there it goes. That one didn't work, did it? Into the divergence high. There's your chili dog roll. I thought we'd just have a good time with it. With momentum and path, still can't trade into a line. That was me trying to be cute, to give the lesson about how a close on the wrong side of the triggers is a loss of momentum. And I got that right as I got in. That was my bad for trying to build a lesson. Yep, there you go, Wayne. Well, what I was hoping to do is I was hoping to give that lesson that as long as price is left of the triggers, it's going to go up. And it absolutely thwarted my attempts there. Same thing, same trade. Odds favorable, nothing in the way. It didn't quite get the entry, but it's still the trade. This is exactly the same thing, right? Pete knows that his entry's down here at 31. But when it bounces and starts heading that way, Pete says, dude, I'll just take it like I did get my entry because I still have room to the fib. That's all right. It's momentum and path, and you found a way. I think that's going to be like a t-shirt or a coffee mug. Momentum and path, find a way. Momentum and path, guys. I can't stress that enough. It is. That is your last one with the exact same entry. Birds of a feather. I know I mention it 1,000 times a day. Once you can look at your chart and you can say I have momentum and my path is clear, there's about a bajillion ways to make money with this software. If you can't recognize momentum and a clear path yet, that's where you run into struggles. And that's what the classroom's designed for. It's designed to teach you momentum and path. All right. There's that 50-50 trade working its way up. Guys, we're through pictures, which is pretty cool. What do you want to talk about? I'll tell you what, we'll take that second break. There's momentum, and it looks like we've just established a clear path. And if I get a pullback to the mid-band inside of triggers, that's where the market may bounce. That's where the market may bounce. That's where the market shouldn't go. Does that make sense, everybody? Momentum first, path second. If I get a pullback, it's most likely, it's most likely to retrace somewhere in this range. It's most likely to bounce somewhere in this range. And no matter what happens, my stop goes 4 or 5 ticks below the triggers. That's the KISS plan. 100%. That's the KISS plan. Does everybody see it? I'm not sure if I still have new people in here. Doesn't guarantee an entry, but that's what my rules say. All right, guys, I'm gonna walk a lap. I'll be back in about 5 minutes. Watch the market, take a trade, post a picture, ask a question. When I come back, the classroom belongs to you guys. I'm gonna let you tell me. Joel, if you're sitting on 20 pictures, please start posting them now. I'll see you guys in a few. Joel, I knew you were sitting on them. I don't know why you don't feel like posting them early. That's okay. Joel's like, if I wait till the end of class, I get some personal attention. Andy, with your losers, your performance was the worst this week, but you're still in the green, and your sharp ratio is better than your sister's. Broker, God bless day trading with trend. Lost about 2,000, but you're 1,300 in the green. The ones when I follow more rules are so easy. Amen. Have a good one, Andy. I like that you had a bad day, but you're still in the green. That's pretty outstanding. All right, here we go, Joel. Termination condition, 2 divergences, weak triggers. You wait for the triggers to roll on the large chart, or in the small chart, letting it tell you that the change is coming. Outstanding, getting paid at trouble. And then you enter again, and then you add on, and just keep riding that momentum down. Nice one. I like that, Joel. Strong triggers, room to target. So you let it get below the fib and got ran over because why not? So what kind of trade would you call this one, Joel? And I think this will help. Call that a momentum trade, right? Everything says down, the momentum is good. Yeah, this is where just recognize that loss of momentum. With weak triggers, I wouldn't let it get past a reversal bar. Because once it closes on the wrong side of everything, that's it. That's the end of your momentum. And this is one of the great reasons why if you name a trade, if you know that it's a momentum trade, then look at the momentum. It's gone. Look at the momentum. It's gone on both charts. I might even run a tight stop right on the other side of those triggers. And if it doesn't just keep railing down, I'll look for my next best entry. Hope that helps. And then termination condition. And then let's talk about this. So it's the gap theory, right? But you're already there. Here's the challenge with this one, Joel. You're late on the entry. If you're really going to trade that gap theory, that reversal bar coming off of the same term to close the gap, this gives you room to close the gap. Where you entered in, it's super, super tight. You've got like 2 points to close the gap, and you got lucky on this one. It kept going down, and then you're just riding that momentum down, which is beautiful. But do you see how that reversal bar right here, or even the second one when the smalls roll, it just gives you a little more room to close that gap. Great trade, though. I like it. Everything says down, and you go down. And then once again, there's that good example, right? You lose the momentum on a momentum trade. Great reason to exit. Nice. And then you get back in on the way down. And then when you lose momentum, you're out. Oh, and then you fight everything and you go long. So, Joel, there it is. There's your pattern. When everything says down here, anytime you fight it, you tend to lose. And then you get your head back on and you go with it, and it's easy money. So let's find a way to eliminate that one. 2 divergences. No, you're not trading the divergences here. And let me show you something. This is kind of cool too. This will help, Joel. It's 1 divergence. Because what's the rule on breaking an area? Once the small and large get below this area, that area is broken, rear view mirror. So you had 1 divergence. And it went right to the midband, which is right where I would expect it to go. And then it did everything from that bad bottom. So learning how to pull that one out of the equation, just keep a little more money in the kitty there. Great trading, dude. Everything says up and just super late. That's the momentum trade, right? Hoping that the momentum carries you up. But from a bad bottom, Joel, the mid band's the target. No room. Absolutely no room. And then you decide, well, then I'll go short. It looks like, nope, you go long again. Now you get the next one up, odds favorable, clear path. You get above trouble, and that's the one that works pretty easy. Big difference. So from a bad bottom, mid-band is my first bounce point. So you just no room to run on this one. And then once it closes the gap back to the triggers, once it starts back up here, you've got the momentum, just beautiful. And you get in and you survive the bounce, and then you add on when it goes back up, and I like it. Great heads up, dude. Everything says down, you go down, and it's easy. Man. So get this embroidered on a doily. Everything down strong with nothing in the way, and it seems to be easy to get paid going with it. This is like the world's greatest lazy river. It is 20 feet wide. There's free pina coladas every 18 feet. There is no chance of it backflowing, and you just hop on your raft and go with it. I love it, man. Those are the easy ones. Those are the easy ones. Weak triggers. So what's your top? You say weak triggers roll from top, or triggers roll from top. Okay. But it's a bad top, right? It's not a termination condition. But it is here. So I like that you're not just jumping in because of it. And look how the small chart changes. First you get a termination, and then the gap theory closes, the triggers roll, and then you get in and you take it down to the mid-band. Because what's the expectation from a bad top when the triggers roll? Mid-band. This is awesome, Joel. And then, of course, everything says up, and you go up with it and you get paid. And that's it. So you're starting to recognize this pattern a little bit. And not only is it going to help you capitalize on making that money, but it's also going to keep you from taking the short right there into the mid-band. Great stuff. Great recognition. Man, it's smoothed out a lot. Your trading is really smoothed out a lot. So there's the first short. I'm trying to see. First short, triggers are still up. Second short, off the pivot, stop out at resistance, and then it's pretty easy. And then out at the target, and then by the time you get here, it's odds favorable down and it's easy. And I think this one, Joel, just didn't work. I think it just didn't work. I think it was the right trade. I think you had the right pattern. I think everything that you did is consistent with the things that are bringing you success. It just didn't work. With the pivot stop out here, with the triggers rolling, with everything down, it's surprising that it didn't make the fib. It's surprising that it didn't take out that previous divergence the way it did here. They just had one more in them. That's it. So great trade. Great trade, just didn't work. And I think it's important to recognize and also to accept that sometimes you're going to do everything right and they are absolutely going to hand your butt to you. And there's just nothing you can do about it because you're not in control. And then here, great patience. You know you want to go down. You know you want to take that trade. And great patience waiting for the confirmation. Dude, Joel, really, really solid, man. Really great application of the lessons. Pretty awesome. Odds favorable, clear path. Not quite odds favorable. One line's still out, Joel. One line's in. They're starting to weaken, but my gosh, what a great look. Super low risk. I would lose that one with you. And there's another great example of how sometimes your charts can look awesome and it just doesn't work out, guys. You could be the best looking guy on the block, but every now and then the cute girl's going to tell you no. And that's just how it works. You don't get to be in control of that. You get to control whether or not your rules are met. So, Joel, good one. Great trade, great recognition. Everything was good. It just didn't work. They wanted to push lower. That happens sometimes. And now I have weak triggers at a fib. And for me, that's a sit on your hands and do nothing, Novak. That's a relax. There's nothing to do here. Just kick back, enjoy. Talk to your class about something. So what do you guys want to talk about? What's on your mind? What do you need help with? Stuff to do, things to do, stuff to talk about. Let me flap my gums a little bit and then I'll just mute the place. I want to share this one with you guys. This is called exit conditions. And this goes into the idea, and Joel, you gave us an awesome picture of it. If you name your trade, guys, if you name your trade, then you understand the rules, right? The advantages that get you into it. So if I call a trade a momentum trade, it means that I'm relying on momentum to make that trade successful. It also means that if momentum goes away, my advantage is gone, and it's okay for me to exit that trade and wait for the next one. If I take a high probability trend trade, I know that it takes momentum, path, and entry to get me into that trade. And if I lose one of my advantages, well, then it's okay for me to exit that trade. And this is a little thing that I wrote up to help you guys as you begin to take trades outside of the high probability trend trade. Just reasons that you might exit. And I think that I built this one because I think it's important that you name your trades. If I take a 50-50 trade and I go into a trade with the understanding that it's 50-50, well, then I've got to be aware of the things that can destroy that trade, that can take that trade and remove the advantages from it. And it's kind of cool. And now we've got that momentum, right? And there's nothing in the way. And because I know that this is a high probability look, but I don't have an area inside of triggers, I'm missing rule number 3. I don't have an entry area. So I have to either say I will enter if, how do I break my rules? I won't tell you how to break your rules. Or I just have to simply say there's not a trade for me here. But if you can identify the spot that's most likely to create a bounce, can't you wait for maybe the market to get there and then make a decision? Like if they give me a reversal bar off that area, I'll take a shot to see if all that momentum takes me up to the next area. And that's one of the things that you can do. As you begin to talk to yourself in terms of advantages, you can start to say, okay, I know that this is good and I know that that is good, but I know that this isn't perfect. I'm not just going to jump in. I'm going to be a little more aggressive with my management and stuff. Market rolls. Well, it didn't yet, Joel. It didn't roll yet. You had odds favorable momentum. Your large triggers were still up, right? But your small triggers rolled. And then your small chart gave you all the change you need to take advantage of it to get to the next area. So by the time you entered, it did roll. Well, maybe not quite. But your small chart had already rolled. Your small chart had already tested the areas. Your small chart had already broken the areas. Really nice. Why do you sit on these? Why don't you just throw them all in at once? Fighting the small triggers into a termination condition that just held. Everything says up, Joel, and you lost. Bad trade, I agree. That one doesn't fit your plan. Not your trade indeterminations, but once everything breaks, easy money to go up. Nicely done. Great recovery. How are you managing the add-ons? Where does your stop go? You don't have to answer. But if you're just going to keep clicking buy, how do you determine that it's okay to click buy losing momentum? How do you determine that it's okay to click buy with no momentum right at a fib, right? That's not a momentum trade. That's a jump the fudge in and hope for the best trade. And neither of your charts are giving you that momentum is likely to carry you, look. Does that make sense? So be careful. I know you're on simulator, dude, and you've got a chair next to your chair for your balls because you can do no harm. But have reasons. Have reasons when you enter the market. I'm starting to see that from you. I'm starting to see that I'm just going to jump in. I'm just going to keep compounding and going. And all it takes with that loss of momentum is one spike like that to wipe out your entire account. Because you're hoping that without momentum, the market goes. Does that make sense? I'm not reprimanding. With this look, nothing in the way? Yeah, it's a momentum trade. With this look, everything in the way and no momentum, it's a man, I sure hope it keeps going up. Odds favorable, momentum down, potential to break. You get in below the fib. Beautiful. Everything still says down. You're trading directly into the fib without momentum. And you're getting in, and it works out. Nice job. They tried to go up and couldn't and went down, and when they did, that's when you entered with this look. Good stuff. Just riding momentum. Well, you're riding clear path, hoping it doesn't stop, and it didn't. Great job. It says up. You go up with it, and it works out beautifully. Everything still says up. You go up with it, and it works on beautifully. Everything says up. You don't really have any room. And then you get stopped out. And then you don't have momentum and you're losing momentum and you're just trying to jump. You thought we were breaking it. So let's address that. Stop posting in the room for a second and listen real quick. I thought we were breaking it. Why did you think we were breaking it? Your small triggers were rolling. You had weakness and it was getting even weaker over here. And you saw that line. So guys, you don't ever have to guess. You don't ever have to guess and hope that we're breaking it. Let it break. Have that advantage. Get below the trouble. And then it becomes easy. And then it becomes easy. The difference between hoping something breaks and allowing it to break is such a difference in the end result. Strong trending market, everything is going up. You let them fight, and when they lose that fight, you ride it up. Really nicely done. Weak triggers, middle of nowhere, and you try to go long a couple times. Weak triggers, you try to go long and get run over. None of your triggers stay up anymore. You try to go long, you get run over. And then when you finally trade with every trigger going the same direction, life is easy. You thought the gap theory will surely take you to the fibs and your targets. Where's your gap theory here? Joel, will you help me with this one? You're into the large triggers already. Your gap theory on this chart started down here. This is just smalls on the wrong side. It's a downtrend. There's no momentum pushing on this chart. This is, I just hope it goes up. And this is kind of what I'm talking about. When you don't have the momentum, when you see that it's weakening, if you had added on to this position, another 2, 3, 4 contracts, you get slaughtered. You wipe out everything that you make. Market reverses, double divergence, print same area, reverse down, and now you're going in. And when everything agrees, it makes sense to add on. I'm not saying this is what you're doing, Joel, but I'm gonna talk about this cool phenomenon that happens. I trade with momentum and path and I make money. And I trade with momentum and path and I make money. And I trade with momentum and path, I make money. And now I'm getting cocky. Now I'm feeling a little indestructible. And momentum and path and I'm getting paid. And man, I can do no wrong. And momentum and everything says up. And I'm making money. And holy crap, put a Superman cape on me. And I keep doing it because I'm trading with the market and life is good. And then I figure I can break rules because I'm 32 flavors of kick-ass. Has anyone other than me ever done that? Ever had such a successful run following your rules that you decide you're invincible and you don't have to follow them anymore? Joel, that's what you did on these two trades. And I'm not beating you up or knocking you down, but that's one of the things that happens, guys, is when you start to find success, you believe that you caused it. You believe that you're infallible. You believe that you can do anything you want and still get paid. But if you go back and look at that entry. I know I'm right. Let me do it again. No. Everything says down. Easy, easy, easy. It's so easy. When everything says down with momentum, it's so easy. When you have no momentum, when everything doesn't say down, it's just a recipe for getting your butt kicked. But guys, I think everybody in the room's probably done it. Everybody in the room has said, I've had such a good run. I've had such a great week. I have been such a consistent trader that I'm going to break my rules. And Andy broke his rules. And it stole his success. And I hope that if you've experienced that, you understand where I'm coming from. And I would say that you're fighting. If you take $2,000 in losses on long trades, you're probably fighting. You're probably fighting. It probably wasn't a long trade. You formed the opinion that the market had to go up. Notice that I only lost $2 on short trades. I know you do, Joel, but what's great is your lessons are lessons for everybody. And they're lessons that everybody has to learn. And it's amazing how we know that momentum and path is such an advantage, and then we get bored, or we get restless, or we get arrogant. Arrogance, probably me. My arrogance knows no bounds. And it's a crazy cool thing because it's part of the education process. It really is. It really is. Good stuff, though. I can't tell you how much I appreciate the time you spend posting in this room because it's great lessons for everybody. So the triggers begin to weaken and then they roll, but it's a weak top and we're into a termination condition. We're into one-to-ones. None of the triggers have broken. And as much as you believe, wow, the market has changed direction, the trend is down, the momentum is great, you have an area with the potential to stop it. Directly into a termination condition. Directly into a termination condition. Triggers on the wrong side, Joel, and you lost. But once your small chart rolls and agrees with the trade, you win. Trading to the fib, forming an opinion about the fib breaking, losing your opinion, getting to the other side when the triggers roll. Look where your small triggers are on this trade, Joel, compared to where they are on this trade. You have to remember that you're trading higher time frames. And if you don't let your small chart get in line with the large chart, you're going to see fluctuations. You're going to see this dance. You don't have to trade the dance. You don't have to hope. Let those small triggers be on the right side of the large triggers, and it's amazing how much more success you'll find. Odds favorable momentum. It does the dance. You take a short again, wrong short. You manage to get paid, and then you give it all back because you formed an opinion about this holding. And then when everything agrees, you go up with it, and it becomes pretty effortless. And that's your pattern. Look where the triggers are. Look where the triggers are. Huge difference. Huge difference between the two. Great stuff, man. This says down, but this is on the wrong side. No reversal bar to get you in, jumping in on the wrong side of everything. And then once you get to the right side of those triggers, it becomes easy. And then it goes up, and then once you get to the right side of the triggers, it becomes easy. Pretty awesome lesson. And Joel, I think that's probably the secret to trading these higher time frames. Chris, it slows it down for them, is the easiest answer. Is it just slows it down. It's the same patterns, it's the same momentum, it's the same all of that. It's just when you're on a higher time frame, it slows it down. It's more comfortable for Joel, so that's what he's doing. I want to try and go back to this picture. I take so many pictures, I don't remember what it was. Does that make sense, Chris? It's just different. It's just a higher time frame. Looking for my direct messages here. And Joel, this was the conversation that we had before, and I think that this was good. Close on the correct side, close on the correct side, close on the correct side, close on the correct side. I think that for these really big charts is where the advantage comes in. And Joel, that's the same lesson that I teach on people that are trying to trade the NASDAQ and taking those trend trades. Is you have to have your small chart. You got to be on the right side of those triggers, and the advantages go up a lot. And what it does is it keeps you from forming opinions too, a little bit. And yeah, Chris, stops are bigger. They have to be. They're bigger bars. They're bigger bars, so it means that you have to be willing to put a bigger stop. Same as NASDAQ. NASDAQ, my stops start at 30 ticks on NASDAQ. Good stuff. Great pictures. 50-50 trade, awful lot of divergences. I don't know if it's going to break or not. We'll find out. What would you guys like to talk about? What's on your minds, guys? What can I help you with? Woo, momentum for the win. Definitely momentum for the win. How we doing? Bob B, how you doing today? You're quiet today. James, good to see you in here. Can I do anything for you? Morgan? Wayne, Jerry, Vad, Muser, Steve, Pete, Joel. Not Joel. Joel got me. Like it. Momentum for the win. I love it, right? Momentum for the win. It's crazy how often that works. It really is. It's pretty outstanding how often momentum carries you, and how often termination conditions ruin your day. Right side of the small triggers, beautiful trade, perfect exit. FOMO's real, isn't it? The fear of missing out. Man, the fear of missing out is real. And, you know, I have a theory on what creates the fear of missing out. Right on, Morgan. The fear of missing out is the same thing that keeps people or gets people into trades they shouldn't be into. The fear of missing out is what makes people hold longer than they should. For whatever reason, there's this little nagging voice in the back of our heads that says you better go ahead and make it all. You better get paid 100%, all the money you ever need to survive life for the rest of your life, and get it in this one trade, because the markets might flatline. The markets might stop trading tomorrow. You never know. So hold into that termination condition with divergence, right? Take that trade into that termination condition. Hope that no momentum carries you to the next level. And guys, the reality is I don't think the markets are going anywhere. And as long as they go up and down, we can find an advantage. As long as there's volatility, we can find an advantage. As long as we can identify advantages and recognize patterns, guys, we're in a pretty good spot. You just kind of have to be patient a little bit. Someone should tell you guys that 90% of your day is going to be spent reading indicators, that 90% of your day is going to be spent doing nothing, that 90% of your day is just waiting to have an edge, and letting that edge develop rather than trying to force that edge. And that's day trading. What would you guys like to talk about? Aaron, how are you doing? You're kind of quiet in here. Like to make sure you're getting some concepts, feeling good. Steve, nice to see you back in the room. I'm a worrier. If I know that you're new, I like to ask how you're doing, because if you need something, I want to make sure you get it. I know that you guys on demo are evaluating, and you're trying to figure out if it's right for you. And a lot of times, awesome. I love it. Don't be afraid to ask questions. One of the challenges I had when I started watching the software, and just so you guys know, I came from the same place you were. I was a restaurant manager, guys. I was in the service industry for 30 years before I started reading indicators. And what I found is that I was hesitant to ask questions because my coach was John Novak. And not only is he brilliant, he's my sibling. And learning from your sibling is tough. It's like learning from your spouse because he doesn't hold back. And he'll call you names out of love, of course. So what happened is I thought, well, I don't want to hear the feedback, so I'll create my own version of these rules. I'll trade what I think is true. And there's an amazing story that I like to tell. And we're just going to go into story time. I had a gentleman call me once, and this isn't just for Aaron, this is for everybody in the room because it's a fun story. And he told me, and it was nice, it was respectful, but he goes, Mark, I think you're full of shit. He goes, everything that you talk about in this room isn't true. Everything that you talk about in this room is absolute BS. And I know that it's BS because I'm losing. And I said, okay, that's fair. I said, let me remind you, you haven't shown me one picture in the room yet. So I don't know if you're following rules. I said, will you do me the favor? I'll accept that I'm a snake oil salesman in your eyes, but do me a favor, show me your pictures. Just come into the classroom and show me a couple trades. And what the gentleman did is he showed me his charts, and he said, Mark, and we'll say that he took this trade right here. He said, Mark, I had momentum. Look at my triggers. They're red. And I had to say, kind sir, that's actually not momentum. That's weakness. So we need to go through and talk about identifying momentum in the separation that gives you a chance. And he goes, Mark, I had a clear path. Look, price made it through the fib. And I had to say, kind sir, this is not a clear path because your triggers tell you if it's a clear path. And he said something clever like, Mark, I took the pullback right here and I lost, and I keep losing these trades. And what we found was that he was trading his own version of the rules. He was trading his own idea of momentum rather than actual momentum. And he was trading his concept of a clear path rather than the taught idea of a clear path. So when we had this talk, I said, all right, so let's go through it for a week and let's clear up any misconceptions. Let's make sure that you can identify strong triggers, and let's make sure that you can identify a clear path. And let's make sure you know the difference between high probability and medium probability 50-50 and know the rules for both. And it took us about 2 weeks to get him squared away, to get him back on track. And then he disappeared for a week. I gave him the KISS plan. I said, try it again with the understanding. And I gave him the KISS plan. And I didn't hear from him for a week. And I'm a worrier. And I was like, oh my gosh, he quit. He's gone. He's not going to do this anymore. And he hates me. And he's going to go tell all his friends that I kick puppies. And then I get a phone call right around day 9. And he goes, hey, Mark. And I'm like, yeah. And I'm a little tentative. And he goes, so I took the lessons and I followed the plan. And he goes, last week I was at 87% winners. And he goes, I'm going to check in with you at the end of next week to make sure it wasn't a fluke. And at the end of the next week, he calls me and he goes, Mark, I'm at 83% winners. And the next week was like 92% winners. And the final phone call that I had with him was him saying, you know what, Mark? Respectfully, I was wrong. I didn't take the time to learn what it meant to have the rules met. I thought because I bought the software, I should be making money. And I didn't take the time to learn how to execute the plan because I thought because I bought the software, I should be making money. And once he learned the rules and once he followed the path, guys, and once he got a little bit of feedback, and the feedback was the most important part. The feedback was what changed his life forever. So I encourage you guys, don't hold back on the feedback. The feedback is where the magic happens. So Aaron, super long-winded story to say, man, don't be afraid to ask me if you don't understand something, or at least show me how you see something so that I can make sure you're reading your indicators correctly so we can get you avoiding a lot of the pitfalls. And John is doing well. Surgery was insanely painful and very invasive. And of course, he's frustrated because it hurts and he's not healed in a week, much like you guys are frustrated you're not perfect traders inside of a week. But he went to the doctor today and he had a checkup, and I haven't talked to him yet. But he's doing great. They don't anticipate another surgery. Everything seems to work out the way it was. And hopefully, his hope is that he gets to take a shower. That's all he's relying on. He's like, I just want to take a shower. I just want to stand in the shower and let the hot water roll over me. So he's doing well. The pain is lessening. He's getting back to where he needs to be. But it's a big surgery. It took me about 14 months to heal from mine. And he had about the same thing done. But thank you for asking. He's doing all right. Not a strong top. Not a clear path, 2 divergences, and Jen says, you know what, if it starts to go down, I'll take it and make a little money, because with this level of momentum, it's going to be difficult to stop it. And Jen, nice trade. Nice trade. Good job. And great management. Out at the first sign of trouble. Out with change on the small chart. Great management as well. Really well done. All right, guys, I'm going to mute for a second and drink a lot of water because my throat's getting scratchy. I'll be back in like